So in this video, I'm going to be showing you guys how to swing trade. Now, some traders and some investors have different opinions on what swing trading is. What swing trading for me is 3 weeks to about 6 months. So in that period of time frame, that's what I would consider swing trading. Now, some people consider swing trading about 2 weeks to 2 months to maybe 3 months. Mine's a little different. I like to trade. Whenever I'm trading, I like to look for those long-term trades. So when I'm looking for trades, I'm looking at, okay, what can I put my money in? A small amount of money that's going to give me the most amount of returns over time. When you're day trading, a lot of the times when people day trade is they just care about what happens during intraday. So let's say that the stock moves about, let's say that NASDAQ moves 100 points during the day, and they'll risk about 50% of their account, 40% of their account for 50% returns, 60% returns or so. What they do and the risk they're putting, we cut all of that in half and more. So it takes them, when they're putting all that risk, they're doing about looking for 100 points a day. We can get that same 100 points a day with a smaller lot size, risking about 7%, maybe 10% of our account for about 20-30% returns. So when you're looking at that, you don't want to be risking 50% of your account. I mean, who do you trust your money with? A guy who's risking 50% of your account for 60% for 20% returns, or do you want to invest your money with someone who's going to risk 7% of your account for about 16-20% returns over the next 3, 6, maybe even a year? So whenever you're looking at a chart and whenever you're looking to look for swing trade setups, I'm going to show you guys how I do it. I don't look at the 1 minute, 3 minute, 5 minute. None of this makes sense to me. I don't look at any of this bullshit. This is nothing. I like to look at the 1 day, weekly, and month. So first, I need to identify the trend. Clearly, for Nasdaq, Nasdaq 100, the trend's been up for the last like 7, 8 years. We've been in a bull market for the Nasdaq 100. So what we can see is whenever we have these moving averages right here, so this is the 9 day and 26 day moving average. Go ahead and actually turn that to yellow. So we have a 9 day and 26 day moving average. So whenever I'm looking at the monthly time frame and we look at previous price data, you can see right here, price respect to 26 day, respect 26 day here. But what happened with NASDAQ 100? When this trade was pulling back, what was the first moving average that it could have pulled back to? The 9 day moving average. So when you're trading Ichimoku Cloud and you're looking for these long-term trades, I mean, we got a really nice entry. We got an entry like right here. I was watching this, said, you know what, if this comes down, hits a 9 day moving average, because I saw this big pull, I saw when the market was selling off. It had about a 12% correction, which is really healthy for the market. So when I saw that, I said, you know what, price can pull back here. I'm going to go ahead and look for an entry because I'm not expecting price to come down to the 26 day moving average, even though there's a lot of disequilibrium. I wasn't predicting it that far. I mean, if price is going to pull back this far, that's panic on Wall Street. That's crazy. I mean, you can use this for stocks, you can use this for forex, you can use this for commodities, whatever you're trading, you can use this. You have to have the Ichimoku Cloud. So when you're looking for these setups, you have to look for a pullback to one of these moving averages on a larger time frame, monthly, weekly, or daily. We look at the weekly time frame, you can see it pulled back to the 26-day moving average right here. And the good thing about that was when you know that it's going to pull back to one of these moving averages, we have to look at what's going on here. How's our future? Is our future in tune with the way price is going right now? Yes, because it's bullish. The cloud is going up. The cloud has a lot of volume right now. So whenever price pulls back to one of these moving averages on a larger time frame, we can go ahead. Now, looking at the weekly time frame, I would have went ahead and gotten the 26-day moving average, which would have been the 9-day moving average on the monthly time frame. Based off of this, the monthly has a nice bullish hammer. So, I mean, looking at the NASDAQ 100 always makes all-time highs. This is not going to come back down. If you guys are looking for an entry, you have to get an entry before it breaks this high, because closer we keep on getting this, the doors are getting smaller and smaller and smaller for you guys to go ahead and enter. So now we go down to the daily. The daily would be kind of an area where I would have went ahead and entered. I mean, if we broke this back, I'd have to go way back to go back to where we actually initially got our entry. But seeing this right here, I would have took a buy and I would have kept my eyes on this. I would have saw it break past the 9 because I would have watched price right here. I would watch the price action. And I would have saw it come back down to this. Now, all this wicking right here from this candle tells us that there was a lot of buying pressure, meaning that price, the body, got sucked right back up above the 26-day moving average. Now, when I saw that, that would have been an indication to go ahead and buy. So you have to wait. The goal is look at the bigger time frames, understand what's going on. Do not buy or sell on a large time frame when you're swing trading if price is not pulled back to a moving average. So never buy or sell on a larger time frame when you're swing trading if price is not pulled back to one of these moving averages. When price pulls back and then you see some rejection like this, price came back, got rejected, couldn't go through, you can start loading buys right in here, right in this level. And you would have been sitting on a lot of money right now. I mean, it's already made up like 90%, like 70% of what it's done. 10%, yeah, it's made back like 90% of what it's done, because if we go ahead and let's just go ahead and clear this really quick. If we go ahead and look on how far the NASDAQ actually fell about 12.84%. So it recovered about 10%. So we're looking actually about like 80-90% returns back on this. Now, everyone in my academy, we definitely caught this trade. Smaller accounts, for you guys who have really small accounts, like I said, the door is getting smaller for you guys, but you have to wait for pullbacks on any pair you're looking at on the monthly, weekly, or daily. If price is too far away from one of these moving averages, you do not enter on a long-term trade. You have to wait for price to do its work, come back to have a pullback, come back to one of these moving averages, then you can go ahead and enter. If you're not patient in the markets, you're going to get eaten up.